blockchain and cryptocurrency is in the news everywhere, almost literally everywhere at the moment. So I want to talk about a few aspects of this. We have a lot of territory to cover in a very short time, so we're going to jump in. So David, you are running the Silicon Valley Blockchain Association, so I have nominated you to give us the quick 1-minute version of talk a little bit about the value of blockchain. We'll get to cryptocurrency in a minute, because we're sort of doing this a little backwards. But how does blockchain fit into the world? Why do we need blockchain? Give us the
hopefully you hear this. Fundamentally, my response is, yes, it's a buzzword, but what the buzzword represents is the concept of a distributed ledger, as well as the concept of a smart contract. So I think that is, some people call it a trustless society, the introduction of that concept. I call it an automated trust society. And to me that's revolutionary and exciting, and it's ushering in my mind, Internet 3.0. So it's the next this next level, this next era of our connecting. And it's not just about, let's say, the Internet revolution in '95 or so introduced the idea of transactions and communication. Now we're going to introduce finally the idea of trust and the actual automation of trust.
So, Jake, how do you think about this from an investment point of view? You have been investing in technology for a long time. You were at Lightspeed as investing in all kinds of technology businesses. You've been dabbling in this space. How do you think about the opportunity here as a software investor?
It's interesting. I think I and a lot of others use the analogy that it feels very much like 98, 99. For those of you who are around, there were two significant things. One, there was a bubble. Two, there was a tectonic shift. And you can have both a bubble and a tectonic shift happening at the same time. So, certainly the pets.com of the world were around then, but then Amazon, Google, eBay, those companies were created during that time. And so to me, it has that flavor that there's a lot of noise, but at the same time, I think there's going to be fundamental and first order companies created both in the B2B and B2C space.
Alyse, what's your take on this? How excited are you about the opportunity?
Well, I'm quite excited about the opportunity. So what brought me into this space, so to quickly back up, I was introduced as being a board member at BitGive, which is Bitcoin's first 501c3 nonprofit. But my full-time work is with Stillmark Capital, and that's a venture capital investment firm. And prior to that, I worked at two of the larger funds in Los Angeles on enterprise and infrastructure tech. I came into the blockchain space as an investor because I saw the opportunity to do well while doing good. And what I'm excited about is the opportunity to shift culture in a way that empowers many instead of few, while we're building new things, both at the infrastructure level and at the application level. So just to quickly go back to blockchain technology, or to my definition of blockchain, I think what's exciting is that the blockchain allows you to trust a cryptographic proof or to trust in math and numbers rather than needing to ask someone for permission or to grant you their trust, like centralized institutions. And what that ultimately does is allow people at lower socioeconomic statuses to participate in the financial system and in global e-commerce because it allows us to more simply have access to this global network.
And Tom, how do you think about the opportunity here from a startup point of view?
Yeah, so I guess it'd be interesting. I work on a blockchain protocol called Dfinity. It's a scalable blockchain protocol. So I guess it's interesting, I guess, to look at what blockchain is not, right? So we use the word smart contracts, easy to do, to misperceive that it's something smart, like AI, or it's a legal contract. In reality, it's neither. It's neither a legal contract, it's not very smart, it's just cold. It happens to execute in a very deterministic way. When you deploy code on Amazon, it may not perform as you expected, right? It's a black box. And here you got, in example's analogy, you got a vending machine. So that vending machine is completely transparent. So you can see exactly, you put in one coin, you always get one coin if the machine breaks. You know exactly what you're getting. So that's one way to look at it. And then fundamentally, I guess, it might be interesting for those of you coming from the web industry, for the internet 1.0 world is it doesn't necessarily change so much as productivity, but it changes the relationship of production in Karl Marx terms. Right? It changes how monopoly it's much easier to break monopoly because no longer you're concentrating in one private enterprise, but instead you have a central code that coordinates a protocol. We usually call it a protocol, essentially a protocol that coordinates many actors. For example, instead of having, using previous guest example, Limelight, instead of, if you were to construct a protocol, what you do is decentralized protocol that coordinates writers, the service providers, and the users, instead of having a company. So you have different ways, models think about things.
So I guess the question then becomes how, what kind of applications are most applicable to that structure, to that kind of model? I mean, people have talked about using blockchain for a whole wide range of money transactions. If you guys, I'm interested to hear how all of you think about this. What are the applications that seem the most clear cut? Now, obviously, cryptocurrency has been the one that everyone is aware of. But the implication, the discussion about blockchain has been that there's going to be many applications. So I'd love to hear what you think.
The first one that comes to mind for me is identity, especially the ability for folks to be able to transport and control their identity to actually, let's say, refugees in that situation, and be able to be identified anywhere in the world. The ability, again, it's just not about cryptocurrency, but especially in developing parts of the world where they don't have necessarily the faith or the ability to believe in their own central banks or their own governments. They want to be able to do transactions, usually on their phone, on some kind of mobile device. So there's the ability to control and be paid or compensated for your data, as opposed to someone else being able to be compensated for your data. So some on different types of, not just cryptocurrency for the sake of cryptocurrency.
Just something I throw in that, my answer is it's more than you think. It's a vague answer, but what I've been surprised about is how many different areas where you could rethink a particular space for blockchain, for creating a distributed autonomous organization. When you think about open source and why people contribute to open source, and now if you can use tokens to create an incentive mechanism, in that it's a way to transform the creation of software, the re-decentralization of the web. The web is obviously very decentralized in a number of large players. People like Filecoin took one application to decentralize. There are many other applications that can be decentralized. The number of places in the world where there is this notion of a contract, there are multiple parties working together to agree on something and using blockchain to make that more efficient, to take costs out, to increase speed. The former CFO of IBM was on CNBC today talking about that. They think, trade and supply chains can be transformed. Obviously, Ripple is using it to transform financial services and payments and bank settlement. So, we're in the early days. This is like inning one, and I think we'll find that there are more applications than people might have realized that get impacted by this.
Tom, how would you think about that?
So I guess I'll be the skeptic here. So I'm kind of an engineer background, so I tend to be more pragmatic. And startup is really important about timing. What timing really is what are the external dependencies that we look at. So when we think about today, why are we only having ICO and CryptoKitty are the two only successful cases as far as we know, right, on Ethereum? Well, the reason is because the commonality between ICO and CryptoKitty is they're both very volatile. They're more volatile than Ether itself, right? Like, in the last few days, we experienced the first mini crash of crypto, and a lot of people are freaking out. Well, that's not exactly the nature of the current crypto token. So in order to view interesting applications, like identity may be aside, but in order to view interesting applications like supply chain finance, global money transfer and stuff, you need a stable token. That's one of the key crypto components that we're going to see it this next year. There are a number of projects in that field, but not, from what I see, they haven't been very solid yet. The second big component of dependency is like identity. That's a very infrastructure component. If you compare that back to the web in 2002, 2003, if you're trying to do an e-commerce company, like Taobao, for example, if you're going to launch Taobao like Alibaba, you'll be missing a couple of key components. You'll be missing logistics companies. You don't have UPS kind of like company back in 2003. In China, you don't have payment infrastructure, you don't have web, HTML5, a bunch of infrastructure technology. So similar metaphor in the blockchain space, identity, decentralized exchange, stable currency, and then development tooling, which is something most of us don't see, but it's something that basically slows down productivity by 90% of those developers today. Like if you ever try to write a smart contract in Ethereum today, it's still pretty bad. Like at the end of last year, I think, actually 2016, when I was writing a smart contract, it felt like 1970, developing an IBM terminal, mainframe or something. It was pretty bad. It improved quite a bit last year, but still we're not quite there yet. We're nowhere near the modern kind of tooling. And that kind of thing, haven't hit that inflection point. 2018 is very exciting.
Alyse, are you more optimistic than that, or how do you think?
I'm not sure how to respond totally to that. I got a little bit distracted. Did you say at the beginning of that piece that you didn't say this was the first crash in cryptocurrencies, did you?
Oh, I see.
So that distracted me. So to first go to that point, right now we're coming out of, or we're in the process of a downturn in cryptocurrencies. And what's been really interesting, I think, is that frankly for me, in times when the market was less exuberant in terms of the rise in prices, perhaps it was clearer to see what work was getting done on the innovation side, both in terms of smart applications being developed, and by smart I just mean applications that make sense in this environment, or middleware getting developed, as was referenced, is necessary and still in early stages, or infrastructure getting developed. And then when the markets kind of pick up, the folks that come into this space, it's hard to not be distracted by seemingly making quick money. And so right now we're in, I guess, a little bit of one of the dips, but for those of us, and I'm sure there's many of us in the room and everyone on this panel who've been in the space for years now, this is, barely like a blip on the radar, frankly. And so now perhaps if we come down from the high of this quick rise that we saw in 2017 in the prices, we get to start to see applications or abilities of the blockchain introduced to consumers, and we can see that more clearly and focus on that. What I've liked that I saw in 2017 in terms of abilities provided by blockchain technology were applications that were developed that gave users access to the technology directly. And so normally when we access the financial system, of course, we have to go through institutions. Now we can use just a smart UI and UX that gives us access. So for instance, how many of you are familiar with something called Lightning Network, where you can do quick transactions? And have you also checked out Zap, which is a UI UX, kind of like a wallet interface almost. It allows you to see your transactions and the network through which you're transacting when you use Lightning Network. And so that was built by a young guy that dropped out of college in Chicago called Jack Mallers. That was exciting to see the quick progression of his work and frankly how much community contribution went into his work. So other developers on core protocol or on Lightning coming in to help him test the UI UX and then him contributing back. That was great to see. I also want to quickly mention an application that one of my teams worked on, which was BitGive. So BitGive's a nonprofit, but because as we've already heard, there's missing layers of infrastructure. Sometimes nonprofits have to build for themselves. And so what Connie Gillespie did this year was she built something called GiveTrack, which was an ability for a nonprofit donor to actually see their Bitcoin in use in the emerging markets where they were trying to apply it. And what that does is it leverages the technology to help the donor and the charity that they're focused on have a better relationship and become hopefully more engaged. And so applications like this that were in progress in 2017, I'm looking forward to seeing them develop this year as well.
Yeah, one of the things that occurs to me as you talk about that is we talk about the comparison, say, with 1999 and the early days of the internet kind of explosion. And one thing that was true in that time period was a lot of the applications, including some of them that never really survived, say pets.com, had very clear consumer sort of facing experiences, right? Buying pet food online, ordering groceries online, you were talking to your friends, all those kinds of things. I'm not sure that the average consumer has ever had an experience, unless they're trading cryptocurrencies, has had any experiences knowingly with blockchain, which it strikes me as kind of an interesting phenomenon. How do you get the larger kind of community, the larger world? Maybe I don't know if you need to, but like, it seems like there's almost no, except for some of the smaller things that you're talking about, there isn't really any consumer experience yet that involves blockchain. Is that, or am I wrong?
Well, I would argue, the opportunity of things like IPFS and Filecoin, right, is kind of rethinking Dropbox and S3. There was recently one of the largest, not the largest ICO in Asia around a gifting token. Who knows where this will go and which the winners will be, which winners will emerge from this. But let's take the pets.com example. I think the opportunity for entrepreneurs is to think about this as, again, the first innings of many. I think this is a multi-decade opportunity. And look, pets.com didn't work out, but the name is slipping my mind. The largest, or one of the largest e-commerce M&As in history was a pet food company. And so I think for entrepreneurs thinking about how do they get into the space, as was mentioned earlier, look for areas where there's minimal to no dependencies today to build a piece of the infrastructure or an application that delivers real value. I think that's the other thing that I think for investors you have to be careful of. There's a lot of people out there who are looking for fast money, and if blockchain or a token really doesn't enhance the fundamental value of the product, or there's too many dependencies for it to really become a useful service, then I think it's going to be very challenging.
So we should talk a little bit about the ICO market. Initial coin offerings have gone from kind of what the heck is that moment not that long ago to suddenly like an incredibly vibrant way for companies to raise capital that is different than traditional method of raising equity. But it also feels a lot like the Wild West. There aren't a lot of regulation in place. You're seeing regulators around the world raise questions, and in some cases trying to raise barriers to raising capital without regulation. And I'd love to get some thoughts from the panel about how they view ICOs. How do you, as an investor, vet which ones are real, which ones are feel maybe not so real? There was one this week amid all the other kind of craziness that was going on in the market. There's a company called BitConnect, I believe, that where the sponsoring company blew up and the cryptocurrency dropped like 80 or 90%. Now there's basically no market for it. It effectively disappeared, like a lot of money. And so the question becomes, how, as a consumer or as an investor, if you're excited about the prospect of investing in tokens, particularly in ICOs, how do you judge what's real and what's not real?
First of all, yeah, I agree. I think everyone knows it's a bubble period. I prefer regulation. I will say that out loud. It's not necessarily popular in this space. Of course, I'm trained as a lawyer, so I'm kind of receptive to that idea. I think rules of the road are needed. I think it is reasonable for, if you're taking someone's money, to be able to have a responsibility to communicate with them regularly, give them some kind of update, give them some kind of an explanation. It doesn't have to be as onerous as it is now in a regular IPO, but certainly some kind of structure should be introduced. What can I say? This is, crowdfunding on steroids. So I think it's also wonderful to disrupt the venture capital tradition. You wanted it, guys, you like to fund disruption, well, you're going to get it too. And so I really like that. I was an institutional investor, so I've been exposed to that world, and I understand how VCs think and how a lot of investors. I was an LP in about 170 funds at one time when I was chair of the pension fund of San Francisco, so I kind of know that world, and I like the idea of disruption for even them to finally have their feet to the fire. But I don't see it, while it gets squashed one part of the world, another part of the world is allowing it to happen. Gibraltar's, or Singapore's, or Zug, and then, China says no, but now Japan wants, it's gonna be like this for a long time. And it depends on where you wanna go. There's a whole lot of funky stuff going on with offshore accounts, and so while you're an American citizen, you're trying to do other things so you can still participate. There's a lot of stuff going on. It's a very volatile time, but we all know it's inconsistent with everything else that's going on in our planet.
Jake, you looked at a lot of startups, probably hundreds of startups over the course of your career. How do you look at an ICO, how do you know what's real and how do you value them, right? So you're not, if you're filling a company, like earnings, revenue, stuff like that, income statements and balance sheets, what do you look at?
Yeah, I think it's going to sound like motherhood and apple pie, but I think the basis of building a strong company doesn't necessarily vary a lot. You're looking at the quality of the team, you're looking at the market opportunity, you're looking at the value the product brings to that market and what real problem is it solving. We heard earlier about the reason why they did 1 million bike rides is because there's a real problem that's being solved. I think that's still the same thing you have to look for in a company, whether it has blockchain tokens or not, are those fundamental factors. I think a way to look at it is as a new architecture. So when we had client-server computing, right, and the world moved to cloud, there were certain areas where cloud software made a lot of sense and it brought a lot of value. But it wasn't a free lunch. There were particular pockets where it worked incredibly well, and companies have been built over the last decade in more and more places in the cloud space. So again, I think entrepreneurs will say, okay, an architecture shift to a distributed ledger technology, to a tokenized architecture, to a token incentive system, where can that really add value to all the stakeholders? And again, I think there are a variety of those areas. Identity was one, obviously Ripple found one, you can go on. In terms of how you value an ICO, I think that's a very difficult subject. And I think the way you value it is actually basic economics of supply and demand. And so obviously the company wants to raise as much money as possible within kind of constraints and see their token value go up. So people typically will test the market and figuring out how much they could raise. If they get a lot of reception, if they're oversubscribed, they'll increase it. So in similar ways, an IPO, you have certain revenue metrics, you have certain other financial metrics, but IPOs are effectively a supply and demand pricing mechanism. It's an auction mechanism. And so I think fundamentally you have that basic economic principle applying to ICO projects. It's not a fundamental answer, but I think it's an economics answer.
Tom, are you a believer? Are you buying ICOs?
Yeah, so I mean, almost every white paper I receive these days, very few of them make me not angry. Like I'm angry at all of them. They're all shitballs. Almost 100% of that. The shittiest one came from companies that are from the traditional space that are non-crypto, and they're running out of funding. They cannot raise a Series ABC, and they're basically just desperate for funding, and they issue any coin, right? And that includes, unfortunately, even some of the friends, entrepreneurs that I know. They're well-intentioned. They want a company to sustain. They want to give return to the shareholder, but they're basically doing a Ponzi of pyramiding on the ICO buyers to fund return to the original shareholder. I don't think that's very ethical. Some people realize that, some people may not realize that, but I think it's just very bad structured. Now, interestingly, about regulation, so I have a complex kind of about regulation. So in 2014, I thought regulation were bad, the SEC shouldn't exist. Then I gradually realized there's so many scammers. Now, however, whenever we launch a new regulation, you have to realize the double consequences of the thing. For example, the reason why ICO is designed today, ICO token model today are usually called utility tokens, right? Basically, you spend them to buy utility. But that's not actually a really good structure, because just think about the simple fact that you cannot value almost any token reasonably. You cannot reason about its value. Like, what is Ether worth? Should it be $100 million, $1 trillion, $10? We don't know. We know there's probably a minimum boundary. We know probably Ether should at least probably be worth $100 million to be even useful. or Bitcoin, right? Because if I want to send you $10 million, if the overall market cap is less than 10 million, it wouldn't be useful. But we don't know what exactly the upper limit. And the reason they're designed that way, I would say at least half of the reason is because you escape regulation. The fact that regulation basically says, you shouldn't be a security. Otherwise you cannot do that offering. If you're not a security, you only monitor utility token. That's unfortunately a negative outcome of strict regulation. It wasn't intentioned that way, but the result of that.
Well, we could keep going, but then I'd get in big trouble. So I want to thank our panel for a great discussion. Thank you very much.